Hello and welcome to Pathbreakers. This is a show where we bring you voices of thought leaders and experts from various areas. My guest on the show today is Anil Singhvi, someone who's seen the business landscape evolve over the last 4 decades. Today we talk to him about why corporate governance is a cornerstone for any good organization. Stay tuned to this conversation. I am Neha Bothra. Mr. Singhvi, thank you so much for joining us on Pathbreakers. It's great to have you on the show.
Thank you for having me.
I want to start by talking to you about your days at Ambuja Cements. You were there for 22 years. You started as a manager and you went on to become the CEO of the company. So tell us 2-3 things to your mind that you did differently in terms of financial management, operations, marketing, that really helped Ambuja become a leading player in the cement space.
I'm glad you're asking about something which I really wear on my sleeve. I think it was one of the most interesting and defining moment of my life of having spent over 2 decades. I joined the company when we had not even started our first cement plant and 85, and it was a very crowded cement market. In that we had an IPO. I remember there were 7 IPOs at that time. 6 of them flopped. And we were the only one oversubscribed by 7 times. What was it? I don't know. There was no magic, we were not known. There were known names in the market. But I think somewhere people had the confidence in what we were doing, and that carried on all through and through on that. You asked me a question that how Ambuja was different than other cement companies. So I can trace you back to almost 40 years. Then also it was a crowded market. There were many players, many established players. But I think what was the differentiator from others to Ambuja was essentially how we operated our cement plants, how we position ourselves in the market, and from a very controlled commodity. When cement came into an open category, from levy to a non-levy, that means you are selling the cement in the marketplace. Most people did not know. They treated cement as a commodity. And that continues today also. You'll be surprised, after 40 years also, there is not much of a learning. Most cement players, though they brand their cement, but, but giving a name is not sufficient. A brand is a far different thing than just putting a name on the bag. And this is what we understood early in days, that a brand of cement is essentially giving a faith and a confidence in the mind of the buyer. There is a leap of faith.
Sure.
And when you're building your own house, there is an emotional play as well. So your quality has to be good, but your service has to be even better than that. I mean, there are very few brands, particularly in this kind of space, that even after 40 years, almost 40 years, the brand is still perceived to be best in the country.
You were also the CFO at Ambuja Cements,
Sure.
and under your guidance, Ambuja went on to make very important decisions when it comes to growth as well. You have stitched some of the biggest deals at Ambuja Cements.
Well, it's almost tracing the history. But just to give an example, that in 1993, because FIs were given the approval in 1992, the SEBI was born in 1992. In 93, we had the second convertible bond out of India. First was Reliance, and I remember second convertible bond was from Ambuja Cement. So that was perhaps a change in the way we looked at Ambuja from other companies, that we could attract the foreign capital as well. And that was more of a testing time, that can we attract the foreign capital, and what is it that foreign capital will be requiring us to do. The 2 things which came out very clearly: we are in a growth economy, cement is a growing business, so we must grow. And we must grow better than what the market growth rates are, for us to have a better market share on that. And capital providers will always be clapping with both hands if we did this job right. So we understood the game of how to manufacture cement, how to produce it at the most cost effective way, how to sell the cement at a premium and have the confidence and the faith of the buyer. Now the last point which was there is that, can we really fuel the growth by having at the right time the capital? And I think this is where I played that role for almost 20 odd years, to attract the capital at the right time. And then the growth was always, according to me, we were growing at the speed at which, if suppose we had not gotten into this change of multiple hands, Ambuja would not have allowed others to have the market share which was eaten by the others.
You also bought stake in ACC at the time.
Yes, we bought Tata's stake in 99, and that was also funded very differently. We did not take any loans from the banks, because otherwise we would have been in a doomsday scenario. So bridge financing was done from the banks, but then we attracted GIC and AIG and created a separate vehicle and passed on the entire stake of ACC into that vehicle. And over a period of time, when we sold to Wholesale, we just unwounded that vehicle, and then everyone really made money out of that. So I think there were very ingenious way of looking at things and doing things very differently than how the markets are. Otherwise, I don't recollect any point in time with that kind of a growth, okay, and with the market being very, very hostile. In fact, cement market in 2001 was one of the most hostile. Yes. We would have gone belly up, like what we have seen in last 5-7 years, the IBC cases. We would have been really fit case for IBC had we borrowed money. But we did not. So I think those are the decisions which you take, that a good mix of that and equity, what kind of a growth which the balance sheet of the company can absorb and do that. I think those were the early on things, not that I was so wise, but definitely more experienced than others to take those calls.
So at that point, why did you take the decision to not increase your stake in ACC? It would have been a game changer for Ambuja and also unlocked value for ACC shareholders.
I think we were caught up into two things. We just acquired one more company called DLF Cement just before, a week before we acquired ACC, and then we had this, that should we increase the stake or should we really deploy whatever cash which is available for setting up the new cement plant, because that is the growth coming in. By acquiring more, it is only the consolidation of the balance sheet which will help you, but the growth of setting up a plant will not come in. So same capital, do we buy shares or do we set up a cement plant? It was very clear that we set up a plant. And that's how we set up a plant in Maharashtra.
MNCs were so aggressive 20 years back, 25 years back. Take for instance Ambuja and Holcim merger. Lafarge was very active.
Sure.
We've seen this totally die down in the last decade or so. In fact, we've seen many MNCs exit the cement industry. Why do you think that is a trend that has caught on over the last 10 years or so?
Well, I think the Indian market is a growth market. And I don't think most of these players, and again in India, you have European players who are there. It's like Holcim, Lafarge, Italcementi, Heidelberg. For them, 3-4% growth was a good growth. But India, we are growing in cement, I think in the last 20-25, we are going at 8-9%. And if you want to play a meaningful role, you need to have a mindset to grow at 10%. But they did not. In fact, today, when I look at entire commodity pack, okay, you don't have a large presence of the foreigners.
Yes.
I mean, in steel also, we had POSCO who were knocking at our doors for several years. Nippon Steel was doing it. ArcelorMittal also, because of the SR running into a problem, they not set up a steel plant here. So I don't think the global commodity players are really finding India as interesting market from their perspective on that. You look at aluminium, copper, Vedanta is really ruling the roost, and you don't have BHP and others. So I think cement also is holding in the same situation where local dynamics are really not understood, and secondly, they can't afford or they could not afford that kind of mindset to have superlative growth. In fact, Holcim buying Ambuja and ACC was detrimental to the shareholders of ACC and Ambuja, the local shareholders, because they never believed in the growth. In fact, they did not set up a new cement plant for close to 15 years. Can you believe it?
Yes.
15 years. 2007 they set up the last plant, and the Marwar Mundwa plant came in 2022. So if you have a gap of 15 years where you not set up a single kiln, a new greenfield I'm talking about, where the industry was growing by leaps and bounds. So obviously you are not doing good favor to the shareholders.
Sure. We see domestic players very active in the cement industry now. In fact, there's a lot of consolidation happening as well. So now from your days at Ambuja to now as the chairman of Digvijay Cement, what are some key trends that you are seeing?
So in last 20 years, the kind of consolidation which the industry has seen, I don't think there's any industry which has seen this kind of consolidation. Yes. Today, Ultratech has become the largest pure cement play in the globe. There's no other cement company producing to 125, 130 million tons. And I think Ambuja ACC with the Adani will also write the same story. It was only just because Holcim was not growing that both remained at around 60, 65 million tons. But I think they will soon touch 100 million tons, and which is good for the industry. I mean, it will continue to remain very competitive. In fact, you have on one side CCI worrying about it, whether it's becoming a duopoly. Cement can never become a duopoly because we are a very large country and it's a regional play. So every region would have 10, 12, 15 players coming in. And the first 5 players, so long as they own about 70-80% of this, the remaining 20%, because the market size is very large, there will be numerous players on that. And there will be enough competitive pressures. In fact, if you look at the cement prices today, adjusted for the inflation, they are lower than what they were 15 years back.
Does that help producers? Margins are wafer thin?
Margins are wafer thin, but producers are doing what? There are two things. One is that constantly keep producing more and more from the same cement plant, and keep on looking at becoming more efficient players. Today, according to me, the cement players in India are the most efficient cement players anywhere in the globe on the cost fronts. They have done remarkable job on that. and the benefit has gone to the consumers. You plot any commodity prices as compared to cement, and you'll see the cement prices have not moved in tandem with any other commodity, leave aside inflation on that. So I think the cement industry has really reached to a very high level of competencies, production efficiencies, and logistic plays because of being competitive. Even a smaller player like Digvijay, which was also owned by a Brazilian firm called Bothra, which is one of the largest conglomerate in Brazil. But they were owning a small capacity here. They were also getting disillusioned with India. They sold, and we bought it along with True North. And this company, which has not paid a dividend for 33 years until 2019. It's been just over 4 years that we paid our first dividend in 2020 as soon as the management was changed. In fact, just to give an example that this company has been so profitable that at 15 rupees at which the share was bought in last 4 years by dividend alone, 11.5 rupees have been paid back to the capital providers on that. The share price has rallied from 15 to 105 rupees today. Why? Just because you have changed the whole fortune of the cement industry.
You also have a ringside view of some of the most prominent business families in the country and how they've evolved over 4 decades.
Sure.
While some have become bigger, some have ceased to exist. What do you think is the underlying thread that explains the dominance of some?
I think India is a very competitive landscape. So long as you have a capital and good entrepreneurs, the businesses will come up, they will flourish. I think many times the entrepreneurs in India and the business run families have really not paid attention to the dynamics of the business changing they did not adjust to the market conditions from the product or from the process point of view.
I think in many cases it's also been the insistence to hold on and not professionalize the company.
100%. I think the businesses in the last 10 years have somewhere understood this, that capital providers are now seeking and demanding good governance practices, transparency. All that has to come into play in the business. Boardrooms have seen some kind of changes, but I think much to be desired yet. Boards haven't yet risen to that level. In fact, sometimes I feel the promoters have risen more to this demand which is made by the capital providers than the directors sitting on the board.
Do you think there's a change in mindset when it comes to succession planning? Earlier, there was an unwritten rule that it would only be the children of the promoter who would go on to become the CEO and hold positions of importance. Is that changing now, or is that still some way off?
Well, it's happening, but I would have expected it to happen much at accelerated speed. But definitely, we are seeing the change coming in. But still, I think I call it Putra Moho or Putri Moho, which is still very prevalent in India. My children come first, even if they are just not of the age where they can run the large complex businesses, but they are put on the board because you feel that is an extension of the family emotions. So I'm not putting this as a one yardstick that if you're competent, age is no bar on that. But not necessarily that you're born in that family and you have a family name that you justify your being on the board or you being in the driver's seat on that. So I think that mapping has to be done by both by family and by the board on that. And I think the shareholders are the last goalpost, and they decide many times on those issues, particularly in remuneration, which is becoming bit of a thing that you get your family member onto the board, may not be the most competent for the job, but at the same time you also give him or her the best of the pay packet on that. So which is becoming bit of an issue with the shareholders, and I think they're standing on their feet and voting against those kind of resolutions.
This is where I want to bring in your role as a shareholder activist. I know you don't like the term activist, but for lack of a better term, which led you to actually set up IIAS over a decade ago. Tell us a bit about the state of corporate governance affairs in your interaction with companies. There are about 800 companies that you actually cover in your services as a proxy advisor to institutional investors. What change have you seen over the last 10 years?
I think it's a remarkable change. I never expected that in 10 years' time there will be so much of at least awareness. It may get implemented fully maybe over a decade next. But for corporate India in 2010-11, if I look back on that, this was like, is a luxury to have, not even good to have. Oh, you are well managed and you're ticking all the boxes. From there, today, I think every board really looks at it, whether that particular act or the resolution, whether it will meet the shareholders' vote or not. And that is the litmus test. So I think it has come long way. Whether it has changed the landscape, answer is no. Now, second thing which comes to my mind is that whether the debt providers were equally looking at the corporate governance? The answer is no. I'm glad that regulators also rose to the occasion. Last 10 years, I think SEBI has done an outstanding job in at least strengthening this whole process of giving this a tool in the hands of the shareholders. We don't have a bond market, okay? And bank is a more of a bilateral or multilateral situation rather than a bond market. If you have a very vibrant bond market and a very vibrant equity market, I think that will change the whole space. So what I'm looking forward to is that a very vibrant bond market where corporates don't go to the bank but tap a very vibrant bond market. And those conditions with the bond is there that if you do ABC, I will call the bond back. That will make our corporates even more be agile on the corporate governance. And that is where the role of the rating agencies also will come in play. I think they have failed miserably.
Yes.
Howsoever big name they may tout about, in last 5-10 years, in the debt side of the market, if somebody failed miserably, are the rating agencies.
What frameworks can be put in place?
The rating agencies should not be paid by the companies. The first problem is there basically because you have a nexus. The companies pay for the rating. It should be the payer pays. So at the end of the day, if it is bond market, then bondholders should pay to the rating agency. They may get a second opinion. Why? There is no second opinion. Even the banks don't get second opinion. They get carried away by the AA or BB or whatever rating, and they just blindly give the money on that basis. The third important factor for the banks is to look at the future cash flows rather than asset-backed lending. I think name lending should stop. You have a famous case of the shipyard. It was name lending. A shipyard is just a small strip of land available on the sea, and you have a labor. It's a labor intensive. It is not capital intensive at all. How could there be that there were $3 billion given to this?
There was clearly a collusion.
Not only collusion. I mean, everyone failed miserably. The capital providers, the board, the lending. The rating agencies. Everyone failed on that. And now, after 10 years, you wake up and now you have that ED, CBI, and all that. Money has gone. The point is this. Today, I don't think that we have recovered large pools of money with the money has just gone out of the system. We have recovered only the assets, but not the money which has gone out. Right now, last 1.5 years, what you have seen, everyone is providing equity money. In fact, I'm surprised that the market cap is going up sometime just because somebody has repaid the loan by having equity. If the debt could not service, how will it service the equity value? I can't understand, but the market cap goes up. It could get the refinancing by equity. I think those practices have to be changed. People should be more aware of it, and board should play a very proactive role.
Independent directors have been caught napping on more occasions than one in the recent past.
Are they independent? So I think we have got a term, and it's a very, very superlative term called independent director. He is not independent. How was he appointed? And you trace all that. Ultimately, boards in India are more like friends, family, and extended family. There's nothing else on that. So the true role of independent director comes in when you take a trusteeship. Leave the promoter alone. That promoter is doing what is best for the company and for the management team. But you should become the goalpost. Many times you have seen the auditors getting, or rightly so, being held responsible. When was it last time that an audit committee chairman was held responsible and a class action suit was filed against him? Why are we shying away from that? The role and responsibility. If auditors were found to be napping, so was the audit committee chair. And it is supposed to be the competent man to look into the affairs of the company. But I think more often than not, they are just, after 5 years getting re-elected and just, I think hero worshipping and worshipping the promoter or the CEO is the name of the game in India. I think it's a high time we move away from that.
Speaking about independent directors who are not independent, tell me a bit about the board dynamics. You are on several company boards. How do you think the board can work to ensure that the interest of the promoter is aligned with the interest of the minority shareholder?
Many times you see when things are really not worked out well, they are not held responsible for it. Most often than not, they'll say we are only independent directors, we do not know what goes on. Then why warm the chair in the boardroom? Don't accept this. If you take a responsibility towards external capital holders whom you have never met, so I think according to me the responsibility is more onerous. That you are being appointed as a trustee of the people whom you have never met or faced. You must rise to the occasion and do a good job. I call them serial directors. They are not independent directors. They are serial directors because The act allows you to go up to, certain number of directorship. And secondly, you take on this because it is very fashionable to say, oh, I'm on board of 7 companies or 10 companies. According to me, you can't even do a job for 3 companies because every quarter, most board meetings take place in a span of 10 days, 15 days, 20 days time frame. And they are such complex businesses. How much you even know about the business? NRC chair should really work on those aspects before even he or she recommends to the board. Leave aside to the recommending to the shareholders. But I think those are the changes which need to come in.
How do you think the role of auditors, the big 4, can be improved so as to ensure there is more accountability?
I think we are still evolving markets. I mean, go back to Satyam. PwC was caught completely napping on the game. Did we even ban PwC?
No.
So, look at the similar kind of situation in America, right? Anderson went up, belly up. Why? The similar situation was there. Somebody cooked up the books and they were caught. And Anderson was asked to close the shop. We didn't do anything to PwC. Because then, whole politics come into play. I'm just putting a reference of Satyam, but there have been many cases in the last 10, 15 years. Why NAFRA has come in? Because the Institute of Chartered Accountants failed miserably in punishing their own. But whether putting the agencies will really serve the purpose, answer is no. I think we must set some exemplary situations to demonstrate that we mean business. Now we heard about one cable manufacturer where the income tax rates were conducted and they found that almost very large amount of money which was not accounted for. What is the audit firm doing? What is the chair of the audit doing? What are the independent directors doing? If you believe that income tax department, which is completely an external agency, can unearth this kind of a thing, why can't the auditors do it? So I think somewhere class action suit, according to me, is the real game changer, which hasn't happened, but in future will be the game changer. So independent directors and external auditors both should be taken for a class action suit.
So, to your mind, for example, just as a case study, right now we have a Sony Z tussle going on. It's been dragging for 2 years. Shareholders suffer in the process. Sure. What should the independent directors do in such a situation?
I think in this particular case, Sony of course is not a listed company, so I don't have much of knowledge on that because they are also organized in a very different manner in India. As far as Z is concerned, it's been 2 years, as you rightly said, and the board of the Z, in fact, it has changed so many times. I don't know who the directors are because many times the directors have not been reappointed or appointment have been not ratified by the shareholders. That means there is so much of angst in the mind of the shareholder that board of Z has failed miserably in creating value. Z is as a brand, as a studio and a house is outstanding, no doubt about it. Some practices arising out of maybe the promoters or arising out of other things have really not met the expectation of shareholders. But you cannot take away the fact that a local firm, an entertainment business, has come thus far on that. Sony also needed Z and Z also needs Sony. And shareholders have been, look at Invesco. This whole shareholding, they sold and got out because out of frustration that nothing will get done in India on that. I don't think we should have those examples.
For the very first time in India in recent history, we've had a professional management that is trying to stall a potential takeover at Religare. Once again, there's trouble brewing in the boardroom. What sense do you make of it?
Nonsense. The board has completely and fully and miserably failed. Their role is what? Let the shareholders decide. Let the people who own the share decide whether X is good or Y is good. How are they presuming that they are good for the health of their Religare? It's presumptuous. If somebody is saying I already own 24%, regulation says that I must make a voluntary open offer on that. Allow the voluntary open offer. Let a person decide whether he or she wants to sell the shares or retain the shares. If they retain the shares, they have confidence in you. If they sell the shares, that means even you don't have confidence. Then how can you become the champion of others? I find it bizarre by independent director to say that we don't want this open offer to be made without having any competitive open offer on that subject. I think it's a nonsense, complete nonsense for the directors of the Religare. I think SEBI should also look at these positions and correct the course. Right? And I think Religare, as you pointed out, is a very good example. Board has no role to stall something which somebody is offering. They can give their opinion, but they have no right to stall it.
Last couple of years, many new age tech companies have listed on the exchanges. Several have filed DRHPs last couple of months. What's your view when it comes to these DRHPs? You would have gone through them, the most recent being Ola. Are you cautious when you see these DRHPs going to SEBI for an approval for an IPO?
Well, I think SEBI has done its job reasonably well in terms of putting the draft red herring prospectus in public domain. It is for the people to then to decide. I mean, I often have it that the true litmus test of a capitalistic society is that if I float a company called Fraud Unlimited and file my prospectus on that basis, it is for the reader to decide that whether he wants to or she wants to participate or not. SEBI can do in terms of only asking for the disclosures. Ask as many disclosures as possible. Make at least the investment banker and the lawyers who put their name very boldly that we are the people who have seen all that responsible for it. I don't think still law firms, those who put their name on the DRHPs, are held accountable to anything missing into the DRHPs. And I think the SEBI should include the law firms. Investment bankers are registered, but law firms are still not registered. And law firms are the one who will give you a complete history in geography and other things of the legal cases. Investment banker is not competent enough to do that. I think that will improve our disclosures. And finally, at the end of the day, it is the disclosure. It is for the capital provider. You can't stop those kind of things. You can delay the process, but don't stop the process. If somebody wants to raise capital by putting out all that I am completely fraud unlimited, yet if you want to put your money, please go ahead on that. What is wrong in it?
The problem is retail investors don't read the 500 pages. They go by what's...
Buyer they beware. I mean, I don't think that we can take away that fact that buyer should be fully aware of it and beware before he or she buys anything on that. I mean, you constructed a bridge and now you can't say that, okay, somebody will jump from the bridge and I won't construct the bridge because somebody can jump. I mean, that leave it to the person in his or her wisdom to jump from the bridge. On that.
Recently, SEBI did take some steps to have more disclosures, at least when it comes to the valuation of many of these new age tech companies.
True.
Is it enough?
Well, I think the regulations always, according to me, are one step behind the curve. I mean, you have this company which is engaged into the education and you look at the valuations plummeting from $20 odd billion to $1 billion on that. I think regulators can do their bit. At the end of the day, it is for the capital seeker and capital provider. I think we must have a regulatory framework which punishes the people who have done a bad job and quickly, not dragging on for 10-15 years. Justice delayed is justice denied on that. So I think SEBI must rise to the occasion that instead of investing all the time in looking and preventing it, which you cannot prevent all the frauds, but then punish, have a very good system to punish people on that. The SEBI orders are often challenged in SAT and reversed in SAT. In fact, the success rate of SAT reversing the order is almost 100%.
Yes.
That means you must really rise to the occasion, write such speaking orders, doing your job well, so that those are not reversed on this.
In exuberant times such as now, typically when companies are very aggressively looking to raise funds, buybacks, right issue, etc., what do you think investors need to be cautious about? What do they need to be wary of in such situations when there's a lot of exuberance?
Well, Neha, this is the first time I'm seeing that deposit rates are 8% plus by the banks. Yet the hunger of the people who are providing capital is chasing larger returns without realizing the risk. In my 40 years, I have not seen this, that interest rates have gone up to 8%, yet fixed deposit is not fashionable. And people want to participate in the equity market because last 3 years, the equity markets have given the kind of returns that it is becoming almost taken for granted that while buying equity, I'm not taking any risk, which according to me is very wrong phenomena. I don't think that capital markets can run and can be born for providing capital for all sorts of businesses and all sorts of characters, the right issues and the IPOs. And look at the IPOs. When the IPO opens up, it's up some 2 times, 3 times. You can't have that. There cannot be so much of a mispricing. In fact, oftentimes you see when the IPO is priced, that it is also priced at a much higher rate. But when market opens up and the IPO is listed, and you say the prices have gone up even manifold thereafter. So definitely people are not pricing the risk appropriately. And they will lose. They'll lose big money. No
what
doubt
are 3 risks that they need to be watchful of?
I think first and foremost, the business which you're putting in money. What are the business risks, the challenges? Have you understood that? Second, the people who are running this. And thirdly, are you providing the capital for growth or providing capital for retirement of the debt or taking out some other investors? So oftentimes in IPO, I see that what the local and the not so informed investors are taking out the informed investors out. I cannot just visualize this, that an informed, very intelligent investor is selling the shares and completely ill-informed and uninformed investor is buying the shares.
That's what's happening typically with most new age tech companies.
That is where my worry is. that he's getting into, I mean, it's like completely unknown waters he's wanting to swim, and he's going to drown for sure.
So at ICAN Advisors, when you interact with private equities, companies, what's the sense you get from them right now? Are they very optimistic, encouraged to invest more in India? What do you pick up when you speak with them?
I think the wise capital is slightly conservative, and unwise capital is euphoric. The wise capital is getting out, unwise capital is getting in. So I think markets are, to that extent, we are creating a bit of a froth. The valuations are a little overbearing, and definitely our markets are right now heated up.
So how are companies looking to allocate capital at this point?
I think the time only will tell. Right now, I think they are replacing the capital. I don't think they are allocating the capital for the growth of or setting up the brick and mortar on this. It's more of a reallocation of or unwinding the previous situations and getting the new capital on that. So it's a replacement capital, whether it's a debt or equity or some debt which was provided by private equity, or I mean, you look at 90% of the IPOs are essentially either promoters are selling or some existing shareholders are selling. It is not coming for fresh capital to be invested into the projects. That is not there. Who has come out with a cement plant that I am raising the capital for starting a cement plant? No. Or a steel plant or any other large capex on that? No.
What about private equities? Is there a lot of dry powder? Are they looking to raise fresh funds for investing in India?
I think what I see is that the large 4 or 5 private equity guys, and then the India homegrown, I think they are the one who are raising the capital and putting their money on that. But rest of this is still trying to price the market, which is not happening in any case because the markets have run up much more on that. So you have the Blackstones kind of thing, and then you have multiples of kind of thing. I think they both are doing reasonably well in terms of raising the new capital and managing the business well, because they've understood the Indian markets and can create value. But rest of them are still struggling.
So based on the feedback from your clients, what are the big 3 trends that you are seeing this year?
I think the time is ripe now for private sector investments. So people will be encouraged to look at it if it's a well-managed company and wants to get the growth capital. They're definitely participating. Perhaps there will be more exits than the investments for sure, because the valuations are looking very, very good. Of course, this year locally and globally is an important year because we have 40-50 countries going for elections. We will have somewhat unwinding of the high interest rates, all of that. So I think people are really waiting and watching. So I think next 2 quarters with Indian elections also just around the corner, they'll wait until June, July before they start committing fresh capital here.
You often say that P&L is just an opinion, cash is king. So what is the quality of earnings when it comes to India Inc.?
It has improved a lot, no doubt about it. But yet, I think I would like to see more improvement in quality of earnings coming in play. Not having 1,000 notes, the fine prints which you see when the profit and loss account is there on that, as we call it, notes to accounts. If we have 0 notes to accounts, that is the best thing to do on that. Directionally, we are going there, but still I think there will be enough and more time required before we have no notes and these accounts to be read anywhere in the globe. They will reach the same profits. You will be surprised that the balance sheet which are submitted here are recasted when they are submitted in the US, and profit numbers are very different. Why is that? They are recasted completely, including Infosys, the supposedly the champion of good corporate governance. The profits are different when they submit their results for ADRs. It should not be the case. Reserve Bank of India also lowered the bar for the banks. They are not as per IIAS. Why? So we should not come out with these artificial relaxations coming in play, because a provider of the capital or a buyer of a share should be able to read what is presented to him. He can't go beyond the numbers. But if you change the rules of the game, the numbers are different.
So what's your outlook for earnings growth, and will that be a leg for markets to carry on the momentum in the coming months?
Whatever the indices are and whatever numbers which I have seen,
Yes.
they look little overpriced at 21, 22 times. Earnings growth, because we had a huge situation of pandemic, made companies, those who are agile, those who are good, to really set right their business practices in terms of cost, in terms of pricing, in terms of product, all of that. Definitely the earnings will be better. But I think we still have geopolitical issues. We are so dependent upon the external energy sources, and that could be a huge joker in the pack in disrupting the earnings on that. So I think I would rather wait for a couple of quarters to see what is the momentum of our earnings, because we still have, or we still should plan for a downside on account of black swan events. I mean, every day you read something which is not making us very confident that how will the energy game will be played with the Middle Eastern situation doing the way it is.
With multiple roles on a daily basis, I know you're hard pressed for time, but you are engaged in a lot of philanthropic work as well. Tell us a bit about what keeps you busy outside office.
I'm not hands-on. You're referring to Sampark, the orphanage. We have about 800 children. We have about 10-12 schools. So there are vocational training centers where people can hone their skills in terms of computers, in terms of many other jobs which they can get. You may have both, and a combination of the two will work well. So I think that is where my role comes in play, to see how we can do differently, coming from the corporate background, looking at what skill set will be needed next 5 or 10 years for these young children to be gainfully employed, become a good corporate and a good citizen. But fortunately for me, Sampark gives me a completely at the bottom of the pyramid, and Flame gives me at the top of the pyramid. Because the children who come to Flame, who can pay 10 lakhs of rupees as the fee, and here we have about 50,000 rupees per annum for a child to be fully looked after and educated. So from 10 lakhs to 50,000, you see the spectrum of both sides, and try to see that this person also can, over a period of time, become a student of Flame. What will require for her to become the student of the Flame? It's not the money alone, or it is the competitive situation and landscape where we can get a scholarship and she can go to Flame. So those are interesting aspects of life, and I'm glad you raised those.
What more now, Mr. Singhvi? You've achieved a lot. What are the new goalposts?
Yeah, I'm not going to go to Himalaya anytime soon, so that is for sure. So I think the role and responsibility remains same. I don't think it has changed much. Wherever you are engaged, you should be deeply engaged, passionate about what you do. And at the end of the day, when you go home, you must feel relaxed and happy to have done a reasonably good job. That's it.
Mr. Singhvi, thank you so much for your
My
time.
pleasure.
Thank you for joining us on Pathbreakers.
Thank you so much. Thank you for having me on your show.